Okay, so we always love seeing what articles you flagged, and this one looks interesting. It's from The Motley Fool, titled Three Reasons to Buy Costco Stock Like There's No Tomorrow, came from Rick Munaris.
Right. A pretty bold title.
It is. So our mission today really is to dig into why Rick is, well, incredibly bullish on Costco, especially, with the stock price up there near $1,000.
Yeah, that valuation definitely jumps out.
Exactly. So we're going to unpack the three main reasons he lays out, see what the thinking is behind it.
Sounds good. Because, buying a stock that's trading, what, over 50 times trailing earnings?
Mhm.
And, yeah, near that four-figure mark, it definitely makes you wonder.
For sure. So let's dive into that logic, look at his points, see if the data backs up this, buy like there's no tomorrow idea.
Let's do it.
All right, reason one, always bet on winners. Now, Munariz's point here is, well, pretty straightforward. Just look at Costco's history. It's not like a flash in the pan.
No, it's got a long track record, and he backs it up with some pretty eye-popping numbers, doesn't he?
He does. Like, year to date, the stock's up 6%. Now, compare that to the S&P 500, which is down 10%. That's quite a difference.
Yeah, that's significant outperformance right there. And then he zooms out.
Right. Past year, up 35%. Past 3 years, 71%. Go back 5 years.
It gets even better, 239% gain.
And the big one since the IPO 32 years back, a whopping 383 bagger. I mean, those kinds of numbers.
Yeah, they make you pay attention. And it's not just the size of the gains, right? It's the consistency through different market ups and downs. That suggests something pretty resilient about their business.
Definitely speaks to that resilience. But, okay, he jumps right into the elephant in the room, as he calls it.
The valuation.
Exactly. Over 50 times trailing earnings, revenue multiple of 1.6. For retail, especially low-margin retail, that sounds, well, steep.
It does, yeah, if you just look at those
Yeah.
standard metrics. And analysts notice it, too. He brings up David Bellinger from Mizuho.
Oh, yeah. What's his take?
Well, interestingly, he started coverage with just a neutral rating. But he actually praised Costco's fundamentals, its resilience, even against things like tariffs.
So he likes the company, just not the price.
Basically, yeah. His neutral stance wasn't because he saw flaws in Costco itself. It was more that he thought the current stock price already reflected all that good stuff, fairly valued, essentially.
Okay, gotcha. So even the neutral guys see the strength. But Munaris kind of pushes back on that, right?
He does. His counter is basically, look, people have been saying Costco's too expensive for years.
Uh-huh. We've heard this before.
Exactly. And despite those worries, the stock just kept delivering strong returns. So his point is, maybe fixating only on those traditional valuation numbers means you miss out on a true, consistent winner.
Right. It's like recognizing that pattern of success might be more important than just the PE ratio sometimes.
Yeah, it suggests the market consistently prices in those strengths because it recognizes them, which, makes you wonder how much weight you should give that history versus the current sticker price.
Good question. Okay, let's shift to reason two. It's more than a dividend hike. So Costco just upped its quarterly dividend, went from $1.16 to $1.30 a share.
Which annualizes to, what, $5.20?
Yeah. But Munaris points out, with the stock near $1,000, that yield is barely over 0.5%.
Tiny. Not really something income investors are going to chase.
Right. And yeah, he mentions those occasional special dividends like that big $15 one late last year.
Which was nice. Added like another 1.5% yield at the time.
Yeah.
But yeah, you can't bank on those happening regularly.
Exactly. So the yield itself isn't the story here. What Munaris focuses on is the timing. Why increase it now?
Because he notes their payout ratio is only just above 25%. They could afford a much bigger dividend if they wanted to.
So why the relatively small bump right now? What's the signal?
Well, his read on it is that the timing signals confidence. Like, Costco has a strong near-term outlook for the business.
Okay.
He contrasts it with other retailers who he expects might be, a bit more cautious with dividends right now, given the economy and earnings season coming up.
Ah, I see. So while others might be tightening the purse strings.
Costco's signaling things are looking pretty good over here. Even if it's not a huge dividend boost in absolute terms, the fact they're doing it now is the key message. It's like a subtle nod about their future prospects.
It's a confidence vote in their own performance, even with broader economic jitters around.
Precisely. That makes you think, what does a company's dividend policy really tell you about how management sees the future? Often more than just the cash return.
Interesting angle. Okay, reason three. The business is built for every new normal. This gets more into the nuts and bolts of how Costco operates.
Yeah, the fundamental strengths. And he kicks off with some really impressive recent sales numbers. for the 5 weeks ending April 6th.
Get this. Overall, same-store sales up 6.4%. U.S. stores up 7.5%.
And if you take out gas sales, which can be volatile, U.S. stores were up 8.7%. That's really strong.
Especially now, with consumer confidence maybe sliding, recession talk. Those numbers really pop for a retailer.
They absolutely do. And Muniri's stresses, this isn't some recent lucky streak. He points out Costco's been public for over 30 years.
And only had 1 year of negative sales growth in all that time.
Just one.
Yeah.
A small dip, like 1.5%, back in fiscal 2009 during the financial crisis.
Yeah.
That's incredible consistency.
Wow. Okay. So how do they do it? What's the magic formula?
Well, it really comes down to that core model, doesn't it? Modest markups, focus on volume, and the membership fees. That's the bedrock.
Right, the membership.
That recurring revenue gives them stability. He even mentions the recent fee hike, just $5 or $10, which was less than some people expected.
Which suggests they're prioritizing keeping members happy over squeezing every last dime right now.
Exactly. It feeds that loyalty loop. The fees let them keep markups low, the low prices drive volume, and keep members coming back.
Yeah.
It's a powerful cycle. It kind of insulates them.
It really does. It's like you pay to shop there, so you want to go. And the prices are good, so it appeals across the board almost no matter what the economy's doing. Like a subscription to savings.
Well put. And financially, he notes their trailing net profit margin is just 2.9%. That's barely more than the 2% of revenue they get just from membership dues.
So they're really playing the long game. Volume and loyalty over massive short-term profits on each item.
It seems so. It's a different way of thinking compared to a lot of retailers.
So the takeaway for this third point is that the fundamental business just seems incredibly durable, built to last through different economic cycles. Muniri says it's not perfect, but it often seems to be the right stock at the right time.
Yeah, it's a strong case for the business itself being the key advantage, which makes you think, what are the characteristics that make a business truly resilient long-term? Costco's membership is one, but what else creates that kind of stability?
Good food for thought. Okay, so wrapping this up, the Motley Fool article, Rick Muneri's, he gives us 3 core arguments for considering Costco, even at this price.
1, the undeniable track record, just betting on a proven winner.
2, the dividend hike, not the amount, but the timing as a signal of confidence.
And 3, that super resilient business model that just seems to work in almost any environment.
Right. And while, yeah, that valuation looks high.
The argument is that Costco's performance and fundamentals basically justify paying that premium. It's earned it, in a way.
Okay, so one final thought to leave everyone with. We've talked about Costco's consistency, its strong strategy, but what could potentially throw a wrench in the works? What kind of major disruption or challenge, maybe something unexpected, could actually pose a real threat to their success down the road, something beyond just the usual economic cycles?